do this at the start of the show, and I usually do this because we have new listeners all the time. So introduce yourself, Clinton.
I'm Clinton Wilkins. I'm a mortgage broker in Halifax. I've been in the industry for 17, almost 18 years. Right out of university. We funded about $1.4 billion worth of mortgages, and we've done over 5,000 transactions. I always say I've seen everything, but every day I see something new. And the exciting thing is, I actually talk to a lot of our listeners. People see me, and they stop me, and they're like, oh, you're that guy from the radio. And I will give you free mortgage advice anytime.
There you go. I like that. Free mortgage advice.
I'll talk about mortgage lending all the time. So it doesn't bother me. You ask me whatever you want. Ask me anytime. And we're really here for the advice piece. And, we love doing the show.
Simple as that. We do love educating people and doing these shows. This show is pre-recorded, obviously. So this is Tuesday. And just today, Tuesday, it's the 15th of August for reference. Inflation numbers came out, and we had a dip of inflation under 3% last month. We're now back over 3%. I think it's 3.3% or something like that. Gasoline, food prices still housing, food prices up still around the 9% mark. Things are tough right now, right, for a lot of people.
Things are tough. I think fuel, housing, and certainly the food inflation have been really taking a bite out of the pocketbook of Canadians and certainly people here in Halifax. Before we started our show, one of the producers here in the studio said to me he'd moved and gone into a new apartment. He's like, I'm going and I'm paying someone, basically somebody else's mortgage.
Right, yeah.
And you know what? And I said to him, I'm like, I hear the story more and more, and it's not so much that it's something that he couldn't do. It's just right now where the prices are and where the rates are, it just becomes prohibitive at some point for some people. And we know in Halifax, our average house price is somewhere around $500,000.
Yep.
And we've thrown the number out before. You know, it takes income or household income of about $125,000 plus really to qualify for a $500,000 home.
Yeah.
So it's tough for a lot of people. And, if you're a single person, that can be quite prohibitive. And even people in a relationship, home ownership is not for everyone. But I think that if you are going to rent, you need to have another fallback plan, because a lot of that's fallback for people. And we talked about even like what happens when someone dies, what happens with the estate. Often the biggest asset is the home. Yeah. And you have 25, 30 years to pay down that mortgage, and then you potentially will own this asset free and clear. But if you don't have the asset to pay down, what potentially is going to be left in the estate? And I'm not saying, leave your heirs all kinds of money. Let your last check bounce. I don't care.
Right.
But, a lot of people do want to leave something as their legacy.
Yeah.
And if you're not going to own property, then you really need to put the difference away, I think.
And I think that many people need to consider, or perhaps I should say not enough people consider, the liability of owning a home. It's a massive liability. You could have, and we talked in the first segment about insurance, but oftentimes things happen at homes. Furnaces go out, heat pumps don't work that might no longer be under warranty, stoves. You could just go on and on with the list of things that can happen, right? You could have shingles blow off your roof, a chimney. So oftentimes I don't know that people they're up against it financially monthly, and really you need a cushion on a monthly basis in order to be able to deal with some of these unknowns, right?
You 100% need a fallback plan, and either that's cash or credit or both.
Yeah.
And people don't have enough of a fallback plan. They say you have to have several X your monthly income to fall back on. Several X.
Yeah.
Just imagine if you did go through an insurance claim and you don't have the insurance coverage and you need to fix your home. Where is that coming from? It's either from cash or it's from credit, or you don't do it. And I think in some cases, people are too close to the line right now. Cracks are starting to happen. And I'm seeing people who have very good jobs that are certainly starting to feel the pinch.
Yeah, it's true, isn't it? What about monetizing part of your house? Some people, they could potentially look at that with bringing in renters or whatever.
Or an Airbnb or something like that.
What's your advice on that? Because that may sound attractive, but I'm sure
some people don't want to sacrifice, Todd.
Yeah.
I think there's two types of people. I think there's people that will literally do whatever it takes to make it happen, like bootstrap, take rubber bands to make something work. And there's other people that they think that doing something like that is below them. Mm-hmm. I'm sorry, like nothing is below you if you can't pay your bills.
Yeah, that's right. Yeah.
People will do whatever it takes to really make it happen, but their situation is just not that bad yet, right? So I think there's two sides of this coin here. It's how much you make, but it's also how much you spend. So I think you really need to start balancing that out if there is some hardship. And we've certainly had criticism for people that are, in a variable rate. Some people are feeling the pinch, but I also hear it on the flip side of that coin, people that are in a fixed rate that were not prepared and now they're coming up for renewal. I have people that make a lot of money that borrowed at their max when the rates were very, very low, and they have a rude awakening. Yeah. I'm dealing with people that are used to having money and now they're like, we have no money. And it has been a major overnight shift for some of these people. Yeah. And, everybody's situation is different. And I think that's what it's really important to understand. And I think we have to be very cognizant that not everybody's having a good time right now. Not everybody is, feeling the love. Not everybody is surviving inflation. And I think sometimes making short-term changes, and we talk about this with customers, can make a big, big difference. Yeah. I'm breaking some customers' mortgages in the middle of their term and extending the amortization top. I'm doing it right now. Yeah. I'm taking some people out of a variable rate and getting them into a fixed rate. Not necessarily because the rate is lower. It is maybe a little bit, but not lower that they're going to save money. But they're doing it because now they want the stability. And they're willing to pay the same, in some cases more, sometimes a little bit less, to have that stability. But that's not for everyone. And if you want to know what's popular right now, and I think people always ask me, they're like, what should I do? I would say the most popular rate product right now is a 3-year fixed. I would say more than 50% of customers are taking a 3-year fixed right now. It's kind of the best balance of a shorter term with the lowest rate. And I'm not saying that's right for everyone. There's pros and cons to every type of rate product. But that's what's the most popular right now.
What's the rate at 3 years?
It depends. If it's high ratio insured, you're probably below 6%. If it's conventional,
right, yeah,
you're like 6.25%, 6.5%.
Yeah. For people who are purchasing with who aren't renewed, or it's a new purchase for them, are you seeing a lot of 5% people going in with 5%?
Buying a new home with 5% down. Yeah. I would say the most of the people that we're seeing that are doing kind of transactions like that right now, Todd, are first-time home buyers.
Right, yeah.
But I'm even seeing still a lot of first-time home buyers that are coming in with sizable down payments because they need that down payment to qualify or to be able to afford the home. Yeah. We're dealing with a lot of spousal buyouts. I think people, kept it together maybe over COVID, and we're seeing a lot of separations right now. More and more separations that I've seen in the past. So I think that's certainly a trend. Yeah. And there's certainly not as many purchases going on right now, but we are very busy with refinances and renewals, and we'll certainly talk about that more later in the show. Okay. Lots to get to. Again, Mortgage 101, your guide to home ownership. We'll be right back. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.